Yeah. So just now I was saying that how I start my week, right, is that I do look at what's the upcoming news for this current week, right? So that's easily attainable from Forex Factory lah. So if you look at this, right, this week itself, there's a lot of news. So coming up, okay, Monday is pretty quiet, so there's no high impact one. But if you look at Tuesday, you have the Australian monetary policy, and then the yen coming in as well. BOJ is Bank of Japan. Right, so that's for Tuesday. And then if you look at Wednesday, you then have the Clement count change. So if you're not familiar, right, this is actually equivalent to the US NFP, non-farm payroll. Yeah. But that's for USD. That means it's for US side. So this one is for the pound side. It means the weightage of this news is equivalent, almost equivalent to that. Right? So if you look at this, Tuesday you have the Australian side, right? Wednesday you have the pound side of this, right? And then if you look into Thursday, you once again have Bank of Japan, one of the conference, and then you have Swiss franc monetary policy as well, and you end off the day, all right, with FOMC itself. All right, so if you look at this week is crazy. Every day you have one currency's high impact news. That explains why last week was very quiet as well, because I believe everyone will be waiting for what's coming out this week. Right?
If we are entered, would you suggest that we get out before?
Okay, this is normally how I deal with it. All right. If I have a trade entered before Friday, and if it's in profit, what I'll do is I'll shift my stop loss to break even. So basically, it's a risk-free trade. The other thing that we want to take note is that this one we discussed with Lester as well. So I was bouncing ideas with him and say that, there's FOMC coming up this week. Do we want to trade the US pair? Meaning, do we even want to put in the pending orders? Right. So when we look at the signals generated this week, we only have one, which is US related, which is the Aussie dollar. Right, and the setup for it and the overall direction of the trend is the same. So Lester say just go ahead. Anyway, it's just one pair. Right, so this is something that you all have to decide also. Right, so it's not just the USD. Right, so for example, if you look at Australian, tomorrow there's a meeting. Right, so then this week signals we have a few on Aussie pairs. So then again, you need to decide whether you want to take a risk. Right. But I would say generally, if the signals are generated on H4 time frame, it's quite safe to take it, because this news will either invalidate the pattern, meaning your pending orders won't trigger anyway, or these news will actually trigger your signal. Because of H4, right? The entry level that we are looking for and where the price currently is pretty much a distance, and all these news will help us to trigger the price to hit our entry level.
But after triggering, will it stop it?
I can't say that, but that's a risk that you have to decide for yourself. Do you want to take it? Yeah. So in my own experience, we have trades that trigger because of news, all right, and turn profitable. And then of course there are signals that trigger because of news and then straight away stop out. Right, so this week is crazy lah. So you need to monitor yourself. Right, but for us, when we decide, it's more like I will just suggest to Lester. Lester say, okay, let's go in and just decide lah. Right, so that's the first step that normally we do for it. But it doesn't. So we have this in mind, but we do not let this affect our decision on where to enter the market. Right, so that one we still use technical analysis.
So the calendar is like a point of discussion.
Not just a point of discussion, but it's to give you the overall picture of what's happening for this week. Right. So clearly a lot of things happening this week. If you look at next week, right, then you have rough idea. So like Greek election on Sunday. This gives you an idea that you might not want to hold any euro position over the weekend. Or if you want to hold it, you might want to shift your stocks to break even to protect your capital, something like this. Then you want to take a note, like Monday bank holiday, Tuesday bank holiday, Wednesday bank holiday. But this is for yen lah. So then this gives you an idea that yen pairs will have low volatility or low liquidity. So meaning the movement of yen pairs might not be as much as compared to the usual time frame. And then that's where you want to take note of all these things as well. So it's not just about discussion. So it gives you a overall picture of what's happening in the market.
Can we shift stop loss over the weekend?
No, cannot. So that's why you need to plan ahead for your entire week what you're gonna do. Yeah, you can't make any decision on your position once your broker is closed. That means the market is closed. Okay, who actually did a bit of practice? Like, okay, this one I shared with Vincent. So I shared with him that what he can do right to practice is that over a weekend you analyze your portfolio. That means if you are looking at 8 pairs or 18 pairs, up to you. You make your own market analysis on your portfolio first. And then when I send you the signal list, you want to compare. Let's say you have a Euro USD pair in your portfolio. You analyze the market, you found a signal on it, a potential setup, and then you compare it to my signal, and then my signal also have a Euro USD signal. Then you look at it, is it the same? If it's the same, then basically it means that we are actually looking at the same thing. But if it's different, then there's something that you can look into why is there a difference, what is contributing to the difference, and then you can discuss over it. Right? And if you have a signal, I don't have one, then even more there's something to discuss about. How come you have and then I don't see? Right? And if you don't have but then I have, then it's also another thing that you can discuss. Right? So I shared with him that this one you can post it on the group, the Facebook group. Then not only will I be able to comment on it, but you can bounce ideas, like maybe Victor Chia will come in and comment, and Victor Tan will come in to comment. Right. So what I want to share is let's go through some of the pairs here. Okay, we can start from the common one, like okay, we can focus on Aussie because this is tomorrow. Tomorrow there's Aussie news, right? So let's focus on Aussie this week, today, all right, this session, and then let's see what's happened tomorrow. Okay. So the first pair that we can look through today is Aussie dollar. Right. Okay. So I'll quickly hide the time frame, and then I want you to practice that way, right? So you look at Aussie dollar by yourself and see if you can identify anything. Okay, let's take 3 minutes. Okay. Mitch, you found?
I had the previous one ready, and I found another second.
Okay. Previous one is in the same as the signals lah.
Yeah.
Zephyr? H4. Okay. Yeah, okay. So basically if you look at H4, alright, okay. Let's go through this example as use this as one of the example of how I actually go through the chart, right, for my signals generation. Right. So the first thing I'll normally do is I always look at H4 time frame, because if H4 time frame I can find a signal, normally that will be it lah, because H4 the higher time frame I give more weightage to it. So if H4 I can't find anything, then I'll drop down to H1 time frame, and then I'll try to see if there's anything setting up on H1. Right, so my starting time frame is always H4. Right, so if you look at this, right, the first thing you want to see is what's going on in the market. Right, so this trend is down, up, sideways.
Down.
Yeah. Right. So what we are seeing is that overall direction the market is moving downwards. Alright. But what it's doing currently is retracing up. Alright. So what market never go in one direction all the way. So it's gonna go down and then it's gonna come out a bit and then continue going down. Right. So this is what's happening now. So market is retracing up. It means it's moving down and then it's coming back up now. Right. So in this kind of setting, we'll be looking only. Our eye will be tuned to look for setup that enable us to go with the trend, which is down. Right, so that's something that's going to happen in my mind lah. So I will constantly tell myself look for a setup that is selling short. Right, so with that, I'll start looking for that anchor legs. All right, on the chart itself. Still remember what's anchor legs, right?
Lines.
Yeah, lines. So basically what you start looking is lines like this, joining the fractals. Right? So if I have 1, 2 on top any higher here, I know that if I continue drawing I won't see any pattern. So what I want is I can break this major line into smaller lines. right? So if I break it down, I get something like this. Right, so to identify a potential pattern, I just need a minimum of 3 to 4 lines. So I have 1, 2, 3, 4. So quite clear what I'm seeing over here is like a W shape, which is a potential bat or gully. Right, then simply just draw in the Fibonacci retracement, and then I can see my first one comes at the 50% retracement. Do you get this? Right, so 50% straight away I know what we are looking for is a potential bat pattern. Right, so bat pattern completes at the 88.6.
50% that is actually B.
Yep. Right. So Zephyr got this pattern?
Yeah.
Mitch got this, right? Yeah. Alright. Got it? Right. So
I can see now.
yeah, so now it becomes easy and clear, right? So what you need to do is go through the process that I go through, all right? And then of course, as you practice along time, you get faster and faster, right? So the process that I go through always is the same, right? Look at the chart. What is the chart doing? It's moving in a down direction. Then you constantly remind yourself, look for patterns that is together with the trend. Alright, which is a cell pattern. So a cell pattern is always like a W shape. Or for the cipher, then you have a lower low, lower low. Right? Then that's how you start drawing in your anchor links. Right? So after you identify, what we do is we always drop a horizontal line, right? And then we look left. So what we need to do is we always go higher time frame also. So higher time frame is once again downwards direction. But if you look left, there's nothing here. Right? So this is a downtrend 2 points, structure support resistance 0 point.
So that one that you just drew, the red one,
Yep.
is your 80.6.
Yes, correct. Right? So that's the thing. Then the last one we want to do is using confluence level, Fibonacci confluence level. So in this case we have 1. Right? Look at this. 1618 confluence with 88.6, exactly at the same level. Right? So this gives us a 4 points pattern. Right?
Could you go back to the
They-
support resistance?
Yep. So nothing. So it's 0 for this. Right? But you need to take note that because price is moving at its new low, that means it's like the for past few years there is no such low. That's why you can't really find anything over here. Right? But we have a confluence of Fibonacci exactly at the 886. So this gives us a 4 points pattern. Right? So that's how we trade it. Right? And then for entry it's at the 886. Right? So if you look at this, you just take this away. Right? I deleted the wrong. Okay, 886, alright, the level is 0.71718 over here. So for me, when I trade, I like to take either, like just nice 0 or 5. So if I look at this 0.7171, right, I'll normally round down because of a sell pattern. So what I round down is because I want to ensure that my orders get filled. So instead of rounding up, I round down. So that because it's a sell, so I round it down so that I ensure my orders get filled.
So you put in 7.70.
Yes, correct.
Mine is 7166.
Yeah, it's about the same because different broker, different pricing. But because I don't like, like 7.1, then I'll normally round down to either 7.0 or 7.5. But for this case, it's a sell, so I want to round it down to 7.0 to ensure that, yes, buy, I'll normally round up. Alright, so then the stops, if you look at this, the 100 level, which is your X point, is 0.72057. So if it's a H4, we add 25 pips. So if 0.7205, you add 25, that is 0.723. 7205, you add 25, 73. Right? Yeah, so that's how I put my stops. Okay, then for TP we use this Fibonacci to we aim for trade 2, right? So trade 2 is 7071. So this one I will round up because when you sell, when you TP is actually buying it. So I want to round up to ensure that my TP gets filled. Alright, so instead of putting TP at 0.7071, I'll put my TP at 7075. Alright, so 618 is the same. So 618, if you look at it, is 7009. Then I'll just put it at 7010, 7010. Right, so that's it. So then that's how I key in everything. I send the signal up.
709, you put 7010.
Yes, because TP, when you sell, your TP is essentially buying it. So I want to round up. Okay, you got it? Right, so it's as simple as that. And then I just send out the signal. Right, so it's nothing complicated in trading. Alright, it just takes time to practice, to train so that it becomes faster. Right? I told Winston this, you can look at the chart for 4 seconds and determine whether there's something on, there's nothing on, and move on. Okay, so if you all want, alright, you can then start doing your position sizing, etc., and then can key it. Alright, so if you look at the spreadsheet that we sent out to you, right, Aussie dollar over here. Right? So how you read this is we do include the risk to reward ratio over here. So risk basically means your stocks in pip. This one you have, right? You will have access to this, right? Jeffrey have, right? Right.
But I mean, I didn't see Excel sheet.
It's the same. Okay. Let's just use the Excel sheet.
Oh, I never realized it's there.
Right. So if you use this,
006, right?
yeah. So 006 is essentially 60 pips lah. So that helps you to calculate faster in terms of.
But that depends on the different individuals, right?
Correct. Right. So if you look at this, alright, stocks in pips 0.006. So that's 60 pips. Right. So then you just use your position size calculator, determine what's your size, and then you enter it.
What is buy stock and sell stock?
Okay, the difference in orders is that the buy stop, buy stop you compare it to, let me see. Okay, there's two orders. So one is buy stop, one is buy limit, correct? So let's use this chart as an example. Okay, let's say your current price is over here, right? This horizontal line. Alright, a buy limit is that you want to buy below the price. Let me change the color. Blue. Okay. Current price is the red one, right? So buy limit order is if you want to buy below it, which is over here, the blue line. Buy stop is if you want to buy if price goes above your current price. So if it's purple. So current price is here. If it hits your purple line, that's a buy stop. If it hits your blue line and you enter, that's buy limit.
So how will you know it's the right one?
You know, because okay, let's say your current price is over here, and if you are interested to buy at this level, then you should key in a buy limit order, not a buy stop.
But people will stop me, right, if I key in at my stop.
Yeah, you won't be able to key in, like MT4 will tell you that it's invalid.
Buy limit. So if it's a sell, then it's over here.
Yes.
Okay. So I need something different.
You think me around.
This one you practice keying it in order, you get used to it. What is a limit, what is a stop. Okay, all settled for this pair? Understand, you don't have to perfect your trade plan at the first go.
Yeah.
Because it's always developing it. So the idea is you have one that you can work with, then when you apply it into the market, when you start trading that trade plan, then you find out, oh, some information is missing, because when you want to make decision and you can't base it on your trade plan, you know that certain things are missing.
Yeah.
So that's where then you go back and add in.
I started off with backtesting, so kind of got a lot of things.
Yeah, so then that's how you go back and forth. So it's a development process. It's not like a one time off, then that's your plan.
B point for Gunny and back. How do you determine if it's a guide?
Oh, Gartley minimum must touch 61.8.
Price must close.
No, touch.
Week.
Week also can touch. So as long as you touch that 618 level, then it's a Gartley. But if it's between 50 to 618, that means never touch 618, right? So it's still a bet.
Okay.
Yeah.
So just now the fixed fractional, right? If it's one of these, then do I put the buy price or the sell price?
Okay, let me show you how to use this. Okay. So you look at this top four first. You have something as quote, something as quote, something as quote, right? So quote is basically in currencies you have a base currency and a quote currency because it's two pair. So if you look at Euro USD, Euro is a base, USD is a quote. So if all pairs in USD is quote, you're gonna use this column. Right? So if USD is base, so currencies like USD, CAD, USD franc, you need to use this. Right? So how you use this is that if let's say you are trading USD CAD pair, right, you need to key in the price of USD CAD itself over here, and then your stops in pips.
The buy price or the sell price?
It should be about the same one because it's just a little bit different, right? It doesn't matter. So I show you now. If I key in, okay, let me just zoom it in a little bit so you can see. Okay, so if you look at this, right, now 50 pip stop loss. My price of USD CAD is 1.1. My size is 0.04, right? So let's say if you change by 5 pip, right? It doesn't change. Yeah, so it doesn't matter. Even if it's 20 pip, right? It doesn't change. Yeah, so that difference is okay. Alright, so you look at other pairs, you have like the yen pairs, you use this yen column, right? Pound as quote, you use this. So pound as quote is like euro pound, basically only euro pound, pound as quote, right? Aussie as quote or New Zealand as quote, you're gonna use this. So if Aussie as quote, you key in Aussie USD price over here. If it's Euro NZD, you're gonna key in New Zealand dollar price. Yeah, so that's how this works. Question?
It's actually like two. I'm trying to delete one of my triangles and I can't figure out.
Okay, how you can do it is you right click anywhere on your chart, right? You go to object list.
Object list, okay.
Then you can select your object over there and delete it.
And then delete, right?
Yeah. Right. Okay, are we all done with this pair? Aussie dollar. Done? Okay, so that one was a bet, right? So let's look at Aussie-Yen and you can see, okay, let's see if we can find anything on Aussie-Yen. Right, so let me open up the chart. Right, I'll time you again and we shall see if we can get anything. Yen. Right. Okay, let's take 3 minutes for this. Anyone spot anything other than you?
No.
No. Chan?
No.
Kan?
I can't get a.
Okay, so let me share with you. Okay, let's go through the process together, right? So the process is, what's the top process that I normally go through? The first one.
Look at each one.
Yeah, look at H4 chart. So what do I look for in H4 chart?
Actually,
Look for names. Okay.
Yeah, anchor links, alright? So the overall trend first. So you want to look at the overall trend to understand what's the market doing. Then you can, like frame your mind to only look for either the buy setup or the sell setup. Alright, so if you look at this, right, the overall trend for this market is still towards the downside. So that frames your mind to look for sell pattern. Right, so sell pattern, if you look at harmonic, you only have few setups. Either the M size or the cipher, which is there's a higher high, higher low. No, a lower low, lower low. Correct?
lower side.
A low and a lower low. Cipher. Right? So after that, you start to frame your mind and say that, okay, I'm only looking for sell setup. So the pattern comes into your mind. And then what you want to do is you start looking for anchor legs. Alright? So let's do a quick recap for anchor legs. How we do it is we always start from the right. Start from the right and then start drawing to the left. So you start from right, current price is here. You start from right, you go like this. Correct? You always draw in the obvious one first. So from here to here, you have 1. From here to here, you have 1. So when you have this coming in, you know that there won't be any pattern anymore. So then, even if if you go like this, you might have something. Because you have a W.
Yeah, but your A and C
Correct.
cannot be like that, right? I mean, that wouldn't happen.
Yeah, so C is a little bit deep, so it might have crossed the 88.6. Alright, so let's say that it crossed and then we don't take it as valid. Alright, or okay, so since we are on this, right, I want to share with you. This one I shared with Vincent just now. So for H4 time frame, when I look for pattern, right, I don't want to look for such huge pattern. Alright, if let's say I take this, alright, this pattern, alright, is gonna be a bad. Let's say it completes over here. Alright, so let's say I have this bad pattern. Right, let's just take as this is okay, right, for ceiling. Okay, so if you look at this bad pattern, this is a H4 pattern. It's gonna be very huge. It's gonna take a very long time for it to move from here all the way up here, and highly likely it wouldn't happen within this week. Alright, so with that in mind, when I look at H4 chart, when I find pattern, I normally find a smaller one, so that the chance of it triggering is there. Patterns. Right? How small the pattern is normally, if you look at this whole chart, right, my pattern normally take up about 1/3. Alright?
Normally,
1/3. So if you like break this whole chart, you break it into 3 parts, like 1, 2, 3. So my pattern normally is 1/3. Alright, so with that, right, let's hear everything again. Alright, so just now we have this anchor legs, correct? Alright, so if we focus on this, right? If you major anchor legs have nothing, we then break it into smaller ones. Right, over here you can break into potentially like this. Sorry, over here. Like this. Alright, so this might potentially give you a pattern as well. If you look at this, you have a higher high, a high and a higher high, a potential cipher pattern. But then we know that at the start, we already tell ourselves we look for sell pattern. So this one you might not want to take it, or you might want to consider. Question? Yeah.
you think this pattern is for X?
X, A, B, C, and then potential D.
What about X, A, B, C?
Right? No. So this one is something that might potentially happen. Right? So, but we already frame our mind and tell us that we want to only look for sell pattern. So this one we might want to ignore it, right? And then once again, if you break this into smaller one, you have this one. Alright, and then if we look at this, you see it? Right? So that's how the process goes through. Right? You draw the major one, and then you break it into smaller one. Right? So once you have this, you start measuring your fib, alright? So you see this point comes in at 382. So for a cipher, it's valid. Right? And then you delete this,
Is
right?
this actually triggered?
Not yet. So if you look
Very
at,
near.
yeah, it's very near. So if you look at extension, it comes in between 1, 2, okay, let me put it properly. Right, it comes in between your 127 and 141 within that zone. So it's again C point valid. Alright, then the last step is simply to take from this side to your C point, and then it's at 786.
Exactly.
Yeah, so 786 over here.
It's 6.16, is it?
Yeah, okay, so if I look at this, alright, let's go through again. 786, my chart here shows 86.208. So what am I going to key in?
In this case, you're looking to go short.
Yeah.
20.
Yeah, 20. Agree? Okay, so stops, right? Okay, stops 100, which is my X level. This is 87.322. Okay, 87.322. So what is my stop loss?
Plus
Let
25.
me key in 87.322. That's my X. Make it bigger. Can see, right? Yeah.
Yeah, okay.
So what's my stop loss?
87.5.
Okay, what's the first step of deciding stop loss?
Consider.
Time frame.
Yes, so time frame is And?
84.
that's a buffer of correct. So if this plus 25, you get
3, 2, 4, 5.
3 to 25.
Not 5, 7.
5, 7.
This is right.
Okay. Let me okay. See 3 2 plus 25. Okay, this is yen pair.
25 pips. This is yen.
Yeah. So it'll be 87.572, correct? Right? So from 572, that's where we decide whether to round up or round down. So for this case, what is my stop?
Round up. 5, 8.
Okay, again,
Okay, 572.
plus 25. Okay, because H4 time frame, our buffer is 25 pips.
Maybe 5, 7, 2. Sorry.
Yeah. Okay, so for 572, you round up or round down?
In this, out.
Yeah, so round up, what will it be? Okay, 572, if I round up, I'll be doing 60.
Oh, so much.
Okay, why 60? Because I don't, okay, in pips, you don't look at the last decimal. So it's 3257. So 57, I don't like to take in between. It's always 05 or 0505. So if you round up, then it becomes 0. Okay, right. Okay, so if you look at our TP, okay, let's just go through TP1. Then I believe TP2, TP1, the 382 price level over here is 84659. Let me key in. Okay, let's change this. Text property 84.659.
8465.
Okay, so what's my buy price that I'm going to key in for my TP?
84%.
Right. Yeah, so you can key in 4.67. No. 70. Right? Okay. So sometimes this is different broker, different also. So it might become like 6.5 6.5 maybe 6.5 smaller or even 6.4 something. So if it's 6.4 something, then you key in at 6.5. You get what I mean? Okay. Let's assume that this is 649. Right? So if your price level is 649, then your TP normally you key in as 6.5.
Your mine is 648.
Yeah. Right? That's how I do it. So I normally round up to the nearest 5 or 0 level.
Why not 87.7?
Sure. This 84.
84.7. 1.65, not 0.7.
Okay, because I just want to round out a little bit so to ensure my TP is filled. But I don't want to round out by so much. So if from 647 to 70, that's a 5 pips different. Right? And that 5 pips in a cipher of a Gartley might affect my risk to your ratio already.
make it less.
Yeah, so that's why you want to ensure that even if you round up or round down, you don't play with so much.
Just enough to trigger.
Yeah, just enough to ensure that you have the higher chance of making sure it triggers. Right, so yeah.
Trigger.
So for those who are interested, you can key in, because if you look at this, it's haven't really triggered yet. Right, it's very close but haven't touched. Right, so once again, you can follow that process, that Excel to find your position size, and you can key that in.
How is here? I want to sell above it, so it's sell limit.
So normally what I'll do is, after I find a H4 pattern, right, I'll just quickly skim through H1 if there's any setup lah. Normally, if H4 I'll find one, that's it, because I'll normally take the higher time frame pattern. Yeah.
So yeah, because how it tests now is just using what I don't have. So there was no importing.
Correct, and so you have to really manually screw it back on.
Yeah, that's what I did. So like the most I can get for H4 is the most I can get for H1 is probably a year ago.
Yes. If not, then you can purchase for softwares that can do it.
You know anything?
Forex tester can. Let me just find it for you.
Because
Let me just use this. Yeah, this one. But you have to purchase it lah, so it's by license. How much?
probably a few
You can
Buy.
demo it.
hundreds.
Buy
So, to
199. One license is 199 lah.
Forex tester.
Yeah, so this one is good in the sense that you can go back any time frame and then you click as the chart comes out one by one. Yeah, but you have to do some investment lah, $200. Okay, settled for this pair. Okay, so the next one, let's look at Aussie New Zealand. Okay, just check. Are you all familiar with trading 2618 strategy? No.
It's like any other
It's not very
Okay, are you all familiar or totally not familiar with it? Or
Totally.
you know a little bit but not used to it?
You walk me through.
Yeah. Okay, so maybe I'll go through with you this strategy again, since you are not familiar, right? I'll just show you straight on the chart. Let's pull out that.
Aussie and ZB.
Yep.
I don't think there's something to do with two tops or one top.
Yeah.
and six
You're
one.
familiar with it, right? I shared with you this as well already, right? No. Okay. Okay. So the top process, the top process is still the same, alright? For all charts, when we analyze it, the top process is the same, which is H4, what is the market doing? Right? So if you look at this, what is it doing now?
Ranging.
Yeah, very clear, right? Sideways. Right? Up, down, around the box. Right? So it's it's not trending, it's in the sideways market. Alright, so with that, right, you basically can frame your mind and say that, okay, with this I potentially can look for either a buy or a sell. So because neutral, right? So with that in mind, going in, if you look at it and then you start drawing in, okay, just now before that you haven't does this. So if you draw in like this, right, basically nothing, right? And then if you don't have anything for major leaks, then what you do is you start breaking it down into smaller ones. Alright, so if you start breaking it down, something like this, right, you do see something like a W. Alright, but this one, it was last week's signal and I think stopped out already. That pattern. Alright, so with this, you do not have any harmonic pattern. Right, so that's where we come in and shift our process in thinking, okay, there's no harmonic pattern. What is the other strategy we have? One is the 1, 2, 3, 4 structure play, right? You all remember the 1, 2, 3, 4?
ABCD.
Yeah, or ABCD.
Oh, you didn't like that.
Yeah, the 1, 2, 3, 4 lah. Then there's another one is the 2, 6, 1, 8. So it's all numbers. Alright. So 1, 2, 3, 4, you won't be able to find that setup in a range market. because that one you need a higher high, higher close, right? So for this one, what we are looking at is just a potential whether there's a 2618. 2618 very easy. The indicator we use over here is RSI. So for 2618 to set up, what we need is a divergence, right? So for a divergence to occur, the first level you want to take note is an overbought or oversold. That means you need to be in an extreme level. Okay, let me just change the color so it becomes clearer. Wait. Alright, if you look at this, alright, the oscillator goes below 20%. So that's extreme level. Alright, so the first condition that it must do is it must come below this extreme level. Alright, got it? Well, it must. Alright, then the second condition is that it must be higher than the previous one. Alright, so normally what I'll do is I'll draw a line and then you can clearly see it's moving up. So basically you just draw a line to connect the both lows lah, and then you can see it's moving up. Alright, and if you compare this part to the price and this part to the price, you can see that price is moving down. Alright, so this is a divergence because the movement is different. Can see? Alright, so this is what we call a double top or double bottom. So for this case, it's called a double bottom. So you have a condition 1, which is this, condition 2, which is this. Alright, then the third condition is that in between these two, right, there's this level. Right? Third condition is that price has to break and close above this region, which you see price broke and closed above. So that's our third condition. So with these three conditions, you have a potential 2618 already. How you do it is you pull Fibonacci from this second low to the recent high, and you wait for a 618 retracement. That's it. So you have three conditions, and then you wait for a potential setup. Got it? Question on this?
So the second one will definitely be lower.
Yeah. Or it can be on the same level, but this is more important.
But you should diverge or converge.
Normally it's diverge because if this goes like this, you wouldn't want to take it. But if this goes same level, then it's okay. So it's either same level or diverge.
No, the two lines
Here.
should be in the two lines, right?
Yeah.
Should be in opposite direction.
Yes, correct.
As long as they're not in the same, they shouldn't be both going down.
Yeah, correct.
So they could converge or diverge.
Yeah.
Not,
But not at the same.
So in the double top scenario, the RSI will be
On top.
basically the same thing.
Yes,
and again above.
Above
So that's
another
correct.
will be lower.
correct.
Which was the concept behind this trader divergence?
Okay, concept okay, basically oscillators are measuring the strength of price momentum. So if this one, as in when it goes down, right, meaning the strength of price momentum being bearish, meaning going down, is strong. But what you see over here is that when the next time it come and test this level, the momentum is less already. So that means it's signifying that, oh, there's a potential that price is reversing. So this is the whole concept is based on. Alright, the third condition of it breaking this one is a confirmation. That means if you look at this, price has indeed changed its trend. So the third condition that we have is actually a confirmation condition.
Third is
It has to break above this point which is in between these two bottoms.
Question. Is it possible for a double top to have this RSI?
Yeah. Let me show if I can find. Let's use this.
It's usually in the ranging market, right?
This one, yeah. Or it signifies a change in trend. Okay, this top and this top, right? Why? Because this top, it has this one. This is not a very strong one actually. And this one.
But that didn't break 20.
Above, it touched lah.
No, the second one.
Yeah, no. The first one is it must break the extreme. The second one is not. That doesn't matter because the second one, what you need is a lower low, or lower a lower point lah. If it's double top. So if you look at this, this is going down, right? But if you look at price, is basically same level.
Ideally, we want to go up.
Ideally you want something else, but this is okay.
But the RSI would definitely be in the opposite.
Yeah. For top, you look for top. Bottom, you look for bottom.
It's definitely that
Opposite, is it?
way. Like, will it suddenly be, it's a double top, but the RSI is at the bottom? Possible.
No.
The RSI
Seldom.
both break.
Can, but you need to be
But
slanting.
The first one must, but
The first one must be always either higher or lower than the second one. Right?
Condition 2
So
was the divergence, right?
yes, condition 2 is the divergence. The third condition is that it must break this level. Right?
Price must break. Can I say break and close beyond the mid?
Yes, the midpoint.
The valley or whatever.
Correct. Technical term is called neckline.
Neckline.
Yeah.
What do you mean break and close? Like the end close?
Close meaning the candle must close
in this case, must close below 5.
below this level.
But that level we created.
Okay, let me show you. Before all this happened, whoa, something like this. This two, right?
Yeah.
So what we are waiting for is price to break and close below this. That's the third scenario. So if price continues develop, oh, okay,
So
it
over there,
breaks.
okay, on the right hand side. There.
Yeah. So now it breaks. So the third condition fulfilled.
Okay.
So once this is fulfilled, what we need to do is, okay, over here, so you see this price forms a fractal and then it start coming out already.
Right.
What we do over here is we then pull a Fibonacci from the second point
Down
to the lowest one.
The lowest point.
and we wait for a 618. So 618 is over here.
2 people from
Okay,
second.
so when it hits 618, in this case, we go short.
Yes, so if you look at what price is doing, it hits and then it starts coming down again. So this is a successful example.
And you would still do your stop loss at what, 25?
No,
Same logic?
for 2618, yeah, stop loss is above your 100 plus the buffer.
Which
Above
Oh,
100. Yeah, so above your tops lah, basically above your top.
plus
buffer.
25.
Yes. And then TP will be at this one. So you can see risk to reward is slightly more than 1:1.
Oh, TP would be at the
At the lowest, the most recent low, correct. And then of course if you aim for TP2 also, it's at 127 lah.
TP should be at 618, right?
No, entry at 618.
Oh, okay.
Entry is at 618. Your stops is at 100 plus buffer. Your TP1 is at 0, which is your recent low for this case.
And TP2 is
TP
1.
at 0.
127.
Usually it's recent lows.
Yeah, it's always the recent low one.
Only one TP only. Right?
TP1 is here, yeah. TP2 you use 127 extension. Okay, basically means you pull from here
The
up.
other way.
Yes, pull the other way, you aim for the 127 level.
TP2 pull the other way. 127.
Right? So the success rate for this, right, if you identify correctly all these 3 conditions before you enter, it's about slightly more than 50%. Okay, not fantastic, but with risk to reward ratio there, you still make money.
That's correct, right? Can divert, can be straight line on top. But
Yeah,
not the parallel.
correct. Alright, so if you look at what we have over here for this upcoming week, we do have this one.
Mm.
So what we are waiting for is the 61.8 retracement. New Zealand. So all these pairs that we are doing today is all on Aussie, which we have news tomorrow. So we're gonna monitor what's gonna happen.
Does that mean I should add in the RSI?
Yeah, you can add in RSI. So the
Maybe
P,
so crazy.
your com is small.
How do I add?
Okay.
Insert right indicator.
Yes, insert indicator. Then the RSI, the period that we use is 7.
Is the
Normally you already
relative
have it
strength-
if you load out the template that we gave you lah.
Is it the relative strength?
Yes, yeah.
But it didn't really
It
cross.
should hold to the most recent high,
Correct.
which is that rightmost point.
Correct. So during the weekend before the market opened, it was here lah. Yeah.
Mine it didn't cross the 30.
Oh, we used 20 and 80. H4, it crossed.
How
Period
do I-
7, you use period 7.
So the feed lines draw from the second.
Low. Yeah, the second point to the recent high or the recent low.
Must be
Okay, when you are trading percentage, right? Like 2% per trade, 3% per trade. It doesn't matter in terms of pips count.
It's your
Correct. Because it's by percentage.
okay. It's a percent of your
Correct.
account.
Yeah. So the pip count shouldn't really affect you other than position sizing. Alright, so this is you can even see your duration, like this is the power of MyFX book because it helps you track, what's your average winner, so my winner so as long as it breaks 8 days above, normally my trade will win lah. that's the thing that the statistics are giving me. So normally if the trade closes between 5 days to 8 days, it's a loser. So if the trade is holding beyond 6 days, you're hoping that it's going to go beyond 8 days. Just kidding, right? So this
is one way to
so this is one way to analyze, but so quite interesting.
go for this long.
Alright, we had that. Okay, let's go through one last pair, which is the Pound-Aussie. Right. This week we don't have structure trade lah, so we can't practice on that. Right, so look at Pound-Aussie and then see if you can see anything. Right. So go through the process that we went through and then see if you can find anything. Okay, let's time. 3 minutes. Anyone got anything?
bad.
Simple small.
Okay. Chuan?
I see nothing.
Oh, okay. I guess you are seeing a big one, right? Okay, so let's go through again, the process of it. Right? So what's the first process again?
So for each fall, look at the overall trend.
Yes, so in this case, what is it doing?
It's
Good.
going
Correct. Going up, and currently it's still in range, right? But overall, you can see the direction of it is going up, and then now it's doing some consolidating. It means price stall for a while, right? So in this case, we are only focusing on looking at buy patterns, right? So buy patterns are like M's for Gartley a bet, and then cipher is a higher high, right? So once again, if you continue, then you start drawing in your anchor legs, right? So your anchor legs will probably look like this. Do you see this? Right. So I guess once you draw in this, it becomes very clear. That's where your big Gartley pattern comes in, right? Zephyr, see this? No, we didn't identify this. Right. So this Gartley, if you draw in the Fibonacci to find whether it fits your criteria and such, it is a valid one. Alright. But then, once again, I shared with you just now that it's a big one. It might take very long, especially on H4 for it to complete. So what I like to do is I always focus on 1/3. I see if I can find pattern 1/3 of the chart. Right. So if you look at it 1/3, it's basically. Oh, did I just click something? Alright, so 1/3 of the chart basically is around here. Alright, so with 2 lines you can't find anything. So that's where we start to break it down. Alright, and there are a few ways in this you can break it down. One, you can break it down into this, right? Like this. Right, so if you break it down into this, you might potentially see a cipher. Right, so if you measure in your first lick, alright, it comes in at 382 to 6018. And then if you quickly measure your extension, it comes in that level as well. Alright, so if you look at it, yep, it's a valid cipher pattern. Alright, haven't complete, but this is the level it's going to complete. Alright, this is one way. Alright, so let me open up another chart and I'll show you another pattern. Right, let's drop this in. Alright, so just now we find a cipher, right? So if
you open another chart?
you add on new chart. Yeah. Okay. The other way, if
open two same charts.
yeah.
Okay.
Okay. You can have 10 same charts as well. Alright, the other way, if we want to do it, right, we don't want to break this leg into a smaller one, but instead we break this into smaller one. This is something that we get. An M. Alright, and if you measure in your Fibonacci tool, right, you get that this retracement come in at the 50%. 382 to 50%. So it's a potential bad pattern. Alright, which completes at 380. 886.
I think that's the wrong one.
Which one is the wrong one?
The C is...
Okay. So for this C, right, I can't recall just now I was sharing with Chuan. I told him that the C, right, for me, is not strict. That means as long as it doesn't break my A, I'm fine with it. Yeah. So this one, it depends on whether you are strict with the pattern rules or not. But for me, C point, as long as it doesn't break A, right, I'm taking it. Right? So if you look at these two charts, one is a cipher, one is a bad pattern. So two are valid. So it then again decide for yourself which one you want to take it. Right? For me, why I'm taking the bad pattern is because of risk to reward.
But the
Risk to
cipher
reward
C
ratio.
is higher.
Why?
Because, okay, you look at this, bad and cipher, bad completes at 886, cipher completes at 786. So my cipher, my stops in pips is going to be wider than my bad, and my TP will be going to be smaller. So my risk to reward ratio for cipher is not as great as my bad pattern.
This is bad. Right?
Yes, this is a bad. So cipher will come in around here, 786. Alright, but if you look left along this region, you can see that the structure level of this tool is there.
So you say either one.
Yeah. So what you can do or play around with is you can enter half of your position at the cipher, half the position at your back. So these are things that you can play around with, lah. Right? Then what can happen is this. Okay, let me draw in the let's say we have a cipher, right, and we have a bet, correct? What can happen is that price will come down and touch this cipher and bounce up. Meaning, if I'm trading just the bet pattern, I might not get filled. Yes. So you need to be aware that this will happen in trading as well.
So that you're likely to make more money, but less likely to actually trigger.
Yes. So once again, is something that you have to decide which kind you want to take. Right. The other alternative, of course, if you sure want to enter, then you can half position cipher, half position back. Yeah, that's one way you can play around with it. Right. So this one, my signals I send out as bet. Right. And honestly, when I'm doing weekend analysis, I didn't see a cipher pattern. I just saw it now. Yeah, so it does happen, right? You need to also admit that you will miss pattern. Like honestly, I never see the cipher when I'm doing my weekend analysis. I just saw the bad pattern. Right? Yeah. Alright, so when you practice, let's say next week, right, something that you see and then I don't have in my signal list doesn't mean you are wrong. It can simply mean that I miss it out. Yeah.
So there will be all sorts of reasons that you didn't want to
Yeah. So it can be reason that okay, I spotted it, but I don't want to take it, or it can be really that I really didn't see it. Yeah, it can be a potential one that I might take it or send it out, but simply just that the fact that I didn't see it. Yeah. Alright. So once again, you need to decide your entry, your stop loss, and then you can key in. Any questions on this? Yeah, so most of the pairs are pretty close to our entry level lah. So we are waiting for tomorrow's news to see whether it trigger and TP or stop loss. In. Right. Of course, for now, demo accounts, when you're playing with demo accounts, you can basically just play around with it lah, right? But when you're doing live account, that's where you need to be consistent. And even for let's say Zephyr is trading the signals, right? Even trading signals, you must have a plan to trade the signal.
Yeah.
So you have to be consistent with trading the signal. You cannot be like today I feel like trading it, then I trade. Then next week I don't feel like trading, I don't trade. So even for those kind of things, you need to be consistent. Right?
If we just die follow your signal, right, then the P&L will be the same as for your debt.
Different management, different.
Yeah.
Yeah.
That was the key thing. That signals receivers were because the management is different.
Yeah.
But just pure signals receiver,
Right.
It's
And
there, you can
and I would tell you that don't rely on my signal. If one day I stop my signal service, then you won't have anything. All right. So don't rely on the signals totally. Use it as a learning guide.
but I don't use it.
So that's basically what we'll be doing for the subsequent Monday trading lah. Yeah. So we won't be able to cover every pair because signals normally you have more than 10 for each week. Yeah. So it's very difficult to go through everything. But more important, what I want you to pick up is the process that I go through. So along the way, you might be able to pick up certain things that how I do it, and then you can see which one you want to replicate.
I think this is good because you brought us to Forex Factory first, and then like there's a reason why we are looking at the pairs that we looked at today.
Yeah. So
Yeah.
there's some reasons to it as well lah. Of course, not meaning that you're gonna make money, but there's a certain chance that when you look at it, because tomorrow is a high impact news, so there's a chance that these trades are gonna be executed. Yeah, so you can monitor how these pairs that we analyze today work out tomorrow, right? But one thing I haven't shared with you guys is all of these pairs we are looking at Aussie, and all of it we are actually selling Aussie. If you haven't realized it, meaning we have 4 positions that we key in, 4 of it are actually selling Aussie. So if Aussie tomorrow trigger all of our pairs and decide that it wants to strengthen, we might lose all 4 of this. So this comes back to the topic on exposure.
But also,
Why do I
can't we
need
mean
it?
what it is?
Very hard to say.
Probably not.
Very hard to say. But this links back to the exposure topic, meaning how exposed are you to a single currency or one
Just
currency?
lost their prime minister a few hours ago. Not really.
Alright, so you need to factor in also lah. So if you're trading live, then this might come into play, whether you want to take 4 position, risking if 2% each trade, you're actually risking 8% of your account on Aussie. Yeah, if you're taking 5%, you're risking 20% on Aussie pair. Right? So you need to factor in all this as well. Right, but of course, as signal, I send it out pure on technical. So I just tell them that you need to manage your own portfolio lah. So that's all I can tell them. But for you guys, you really need to take into account all these things. Yeah. So it's not only about Aussie lah, but when you trade, next time when you have different pairs, right, you need to take into account like whether you are overexposed in Euro, overexposed in USD, and Yen. Because most of the Yen pairs will have almost similar stuff going on. Yeah. So if you trade all the Yen, you can have like 8 Yens all having the same setup, and then when Yen does something funny, you're gonna lose all 8. Yeah. Right. That happened in one of the months when we are closing it. Okay, chef. Yeah, you look at this, chef yen, Aussie chef, cat chef, Euro chef. Alright, so all of these are chef. So meaning we are actually exposing ourselves to similar direction. That means we are betting on the similar direction of Swiss franc. And then when Swiss franc does something and then it swing, when you lose all four of it, you're gonna have a higher drawdown. So basically we lose this four, yeah. Yeah, but as signals we send out everything and then we still track all of them. But as a trader yourself, you need to decide your exposure. Right?